Hello, my name is Joe Hoyle, and I'm speaking to you from the University of Richmond, where it's a rainy day today. So therefore, it's a good day to learn about financial accounting. I'm the co-author of your financial accounting textbook, and this is the introduction to Chapter 2. And to get ready for this video, I went back and I reread Chapter 2 again, and I was amazed by how many important things are covered in Chapter 2. If you're going to do well in financial accounting, you need to form a good, solid foundation here in the early chapters, and there's much to be learned in Chapter 2 that will help you as you go through the rest of this book. So let's make sure to read the material well and to pick out those things that are going to help you do well. Now we go back at the beginning of this chapter and we talk to you about the idea that financial accounting paints a portrait of an organization so that outside users can make decisions. That's a very basic idea behind financial accounting. In this chapter, we introduce financial statements. Financial statements are the form by which most companies present financial information. They don't simply send out financial information randomly. They put it into the form of financial statements, and those financial statements are sent to outside parties. So we're going to talk more about that in Chapter 3, but we set that foundation up here in Chapter 2. Now, one of the things that I want to make sure you understand right here at the very beginning of the course is that most financial information is not exact. Financial accounting has a bad reputation for being a very, very exact discipline. That's not true. Financial accounting is attempting to paint a portrait. It's attempting to create a likeness of an organization. And that likeness does not have to be, and very much could not be, very exact. Now that sometimes surprises students. Why is financial accounting not more exact? Well, the first thing is that users simply don't need exact information. You're trying to make decisions about a company, and you can certainly do that without the numbers being exact down to the penny. In addition, because many businesses and many other organizations are dealing with huge numbers, it would be almost impossible to get numbers that were exactly correct down to the penny. So users don't need exact information, and frequently it would be very difficult to get that type of information. And finally, and this is something that you'll see throughout the remainder of this book, financial accounting deals a lot with uncertainty. There is uncertainty in virtually every aspect of financial information. You make a sale on an account. Will you be able to collect the money? That's an uncertainty. You are sued by someone who thinks you have done them wrong. Will you lose that lawsuit? And if so, how much will you lose? That's an uncertainty. You sell a product with a warranty. How much will it cost you to fix that product if the product breaks? There are uncertainties all the way through a set of financial statements. And if you think about it, how do you come up with exact numbers for something where there's uncertainty? Well, if you're going to produce information and it doesn't have to be exact, how close is it really? When you pick up a set of financial statements, when you look at financial information, how exact should you expect it to be? Well, in financial accounting, we use the term presents fairly. We are attempting to present information fairly. That means that we want the information to present a likeness that is close enough that a decision maker can make good decisions with it. If it's presented fairly, then that's as good as we probably need for it to be. Now, if I'm a student in this course, my next question is going to be, what do you mean by presents fairly? What we normally say is that presents fairly means that the information that we are sending out contains no material misstatements. So if you pick up a set of financial statements or pick up a set of financial information and you look at it, There are no material misstatements in those financial statements. That's what the financial accountant is saying. What does the word material mean? What does the word misstatement mean? Let's do misstatement first. A misstatement is simply something that's wrong. There is no material misstatements. Nothing materially wrong. Misstatements are broken into two categories. You have errors, which are unintentional mistakes. You did it by accident. You didn't mean to make the mistake. And you have fraud. Fraud is where there's something wrong and you did it on purpose. For example, you stole something, that would be fraud, or you reported something incorrectly knowing that it was incorrect. That would be fraud. So when we talk about misstatements, we're talking about both errors and fraud. But that leaves the term material. Material is anything of a size or a type that would change a decision maker's decision. So when we say that information is presented fairly, that it contains no material misstatements, what we're saying is that there is no errors and no fraud that would be large enough to change your decision. And since there's nothing that would change your decision, you can feel safe in using the information that you have received. We close out this chapter by talking about accounting as a language. Now, we talked in chapter 1 about how accounting was the conveyance of information so it could be understood by outside parties. That's exactly what happens with any language, whether it's English or Japanese or Russian or Spanish or whatever language. They convey information that would be understood. Now ask yourself, how does a language manage to work? Well, it works because there is a structure, a grammar, a syntax, a punctuation, and there is set terminology. If you have rules and you have terminology, you can convey information. Financial accounting works the same way. It has a structure and it has terminology. The structure here in this book is presented or created by U.S. generally accepted accounting principles, which are well known as U.S. GAAP. You often hear people talk about financial accounting and refer to U.S. GAAP. That's the rules that create the structure for financial accounting. And in many ways, this entire course is a study of U.S. GAAP. Who produces U.S. GAAP? It's produced by an organization known as the Financial Accounting Standards Board, which we often refer to as FASB. In addition, there is a terminology, set terminology. And learning that terminology will help you to come to understand the information being presented. I close out chapter 2 with 4 vital terms. Those terms are asset, liability, revenues, and expenses. You need to know those 4 words. You can go very far in this course with those 4 words. Assets, anything you own or control that has future economic benefit. Land, buildings, inventory, patents, those are all assets because they have future economic benefit. Liabilities, your debts, anything that you owe. If you owe an employee, you have a salary payable. That's a liability. If you owe the bank, it's probably a note payable. That's a liability. Assets, what you own of value. Liabilities, what you owe. We often take the assets, subtract the liabilities to get a number that we call the net assets. Revenues is any inflow or increase in a company's net assets by selling goods or services. That's what you're there to do. If you're a bookstore, you're selling books. If you're a car company, you're selling cars. The revenue is the increase or the inflow of net assets because you're able to sell a good or a service. Expenses are a type of reverse of revenues. It's an outflow or using up of your net assets in order to generate revenue. You pay an employee, it's a salary expense. You pay for rent, it's a rent expense. It's using up your net assets in order to generate revenues. Accounting is a language that has a structure and terminology. Those four terms are probably as important as any terms that you have in financial accounting. Read chapter 2. There's much to be learned. There's much that's going to help you become a good decision maker once you leave this course. Read it, take good notes. Let's make it happen.